It's a birthday you may have missed. 3 years of ultra-low Bank of England base rate.
Yes, 36 months ago today, Mervyn King and the Monetary Policy Committee here at the Bank of England cut the official lending rate to its current historic low of 0.5%. And among those celebrating the loudest of his third birthday are mortgage borrowers.
I think for most mortgage borrowers it's been hugely beneficial. Mortgage rates have been lower than they've been in virtually the entire post-war period. Some building societies especially have had standard variable mortgage rates of 2.5%, when the inflation rate's been 5%. That's been outstanding good value. If you've got a good deposit as a new first-time entrant to the housing market, it's also been very beneficial for that group as well. I mean, a 5-year fixed-rate mortgage at 3.3% is the lowest it's ever been. So for many mortgage borrowers, it's been a very good situation for them.
Is there any borrowers that the low interest rate hasn't benefited?
I think some borrowers have been isolated on high interest rates. Take a borrower, for example, that borrowed just before the credit crunch started, where mortgages were very easily available, a 95% loan, and say their house price has fallen by 20%, which is the case in some regions. Then their mortgage loan is now 115% of the house value, and it's extremely difficult for them to move house, to get a new mortgage, to get a new lender.
But the main losers from 3 years of low interest rates are savers. Simon Rose is from the campaign group Save Our Savers. I asked him how savers have been hit over the last 3 years.
What's really happened is that savers as a whole have been the ones who've paid for the effects of the recession, which many of our members consider terribly unfair because they did what they're supposed to do, saving for your retirement, trying to reduce the burden on the state, and yet what then happens is your money gets plundered and effectively is worth rather less afterwards. So it's a terribly depressing situation for savers, and sadly not one that looks likely to change anytime soon. What we'd like to see is the Bank of England stop artificially depressing interest rates. There's no indication that they want to put rates up at all, or even indicate to people that they may one day put them up. But all the way down, they've always lowered rates much more quickly than they've raised them. They do not like the idea of rates going up at all. They just do not seem to think that there's anything wrong. But the economy is completely unbalanced, and that's the reason that we're in such a bad state now.
Do you think we'll see a 6th anniversary of 0.5% base rate?
I do hope not.
But unfortunately for savers, more and more economists and commentators are now predicting a few more 0.5% birthdays. So what do you think the chances are of another 3 years with a base rate at 0.5%?
I think the chances are pretty good of interest rates staying that low. I think the economic recovery is still looking pretty fragile, and inflation is set to fall very sharply, and given all that, the Bank of England will probably want to keep interest rates very low for quite a long time yet.
What will be the wider implications on the economy and the effects over the next 3 years of having low interest rates, do you think?
Well, obviously the aim is that if borrowing rates are kept pretty low, then that should boost borrowing, should boost asset prices, and should get people out there spending their money to try and get the recovery going again. The flip side of that is, of course, that savers will have less income, and again, that's an incentive to try to get people to go out and spend their money.
So while the base rate may stay low for a good time yet, when it comes to the trade-off between savers and borrowers, the Bank of England certainly can't have its cake and eat it too.